We're back for another update. Let's take a look at Bitcoin over here. And Bitcoin has been within Wyckoff reaccumulation for about 125 days now. So this is what Wyckoff reaccumulation looks like. It's doing schematic number 1. And now a lot of analysts, they only know about accumulation and distribution, but they're not knowledge. But I noticed that a lot of people aren't knowledgeable about reaccumulation. And with reaccumulation, we tend to see it many times throughout an uptrend. And for example, we had it back in 2023. And we're actually exhibiting the same signs as we did in 2023, right before we took off and had expansion to the upside. So this over here would be considered your creek in 2023 within this range. You then go ahead and have your capitulation down all of a sudden. Then you have a throwback of the wedge, one last flush, and then you have your expansion out of the range. Over here we have your creek. So this is your creek. We have capitulation, throwback of the wedge, and then one last flush before you see your jump across the creek. Okay, so it looks like we're just following Wyckoff reaccumulation. We also have a WXY correction. And this WXY correction is very significant because we did come down to the macro 50% fib, measured from this last swing low up to this last swing high. Okay, as you can see, we did come down to this 50% fib here. We also came down to the 21-week SMA. Okay, so this is the 21-week right over here. You see how we perfectly wicked there? So we'll go on the 12-hour here, and this is what it looks like. Okay, so you have your 3-wave move down in your W, 3-wave move up in your X, and then another 3-wave move down in the form of a flat pattern. So you have a 3-wave move down in your A, 3 up in your B, and then a 5 down in your C. And now it's likely we're going to go ahead and see your jump across the creek. When we go here and take a look at the 30-minute time frame, this over here would be considered your low, right? This over here is your low, and then you have what's called a wall of worry. And the reason it's called wall of worry because you have a lot of market participants who think that when this does break down, it's going to go ahead and go beyond this low over here. But what it does instead is it just has what's called your aversion, in which you come down to extremes at the 786. And then after we had this aversion, we went ahead and took out this internal range liquidity and then had your flush of all the highly over leveraged longs over here. Okay, coming right down to the 88.6% fib, and now we're seeing continuation to the upside. So now what bulls would want to see here going forward is for price to retract back into the range at 58,800. And what I notice in crypto is that whenever you have a range and then you go ahead and sweep macro psychological low, once you see a retraction back into the range, you're likely going to see the price go towards your value area high, right? And you would want to measure the move from your highest drop-off point down to your expected low. So you would want to measure the volume from this point, from the highest drop-off point down to the low. And you'll notice that if price were to retract back into the range, the value area high likely gets met. So if we measure the volume from the highest drop-off point down to the trough, we can see over here that the value area high is sitting right at 67,348. So about 67,000, 68,000 region. And then the POC is right over here, or point of control, sitting at 61,617. Put it right here. Okay. So this is very significant because we've been within this range for a long time now. We've been within this range for about 4 months. It's about a quarter of a year we've just been reaccumulating. Okay, so now I would be expecting a move to the upside. We also see hidden bullish divergence. So if we take a look at the RSI on the daily time frame, we can see that the low set in January before we had the run up, we have a higher low to the current day. But then on the indicator, we have consecutive lower lows. So this is what's called hidden bullish divergence. So everything is lining up, right? We have hidden bullish divergence on the daily time frame. We have a WXY correction with the Y wave coming down to the 50% fib and the 21-week SMA. We have Wyckoff reaccumulation, and then on the small time frame, we have what's called bullish order flow. Okay, we have remember your wall of worry, throwback for your aversion, and then you have your continuation for your bullish order flow. Now, going forward, the thing that bulls would want to see here is for price to retract back into this range at about 58,800, 58,900 region. Once you get back above this range here, then it's likely we're going to go ahead and meet your value area high. Okay, so I hope you guys enjoyed the video. If you liked it, please comment, like, share, subscribe. Click the link in the description below if you haven't joined the Discord. You get access to over 350 assets, and you can stay up to date with all of your favorite coins. You get a community, and you guys can ask me any question you want. Hope you guys enjoyed. Peace out and take it easy. See you in the next one.